Check mic 212 as always. Make sure that the sound quality is perfect and you can see the picture. That's the presentation right now in front of you. The agenda for today. And I warmly welcome you all. Thanks for coming. I appreciate as always. And let's wait for the rest to join the room. And we will start shortly. Please type 1 in the chat box, where I can now see your comments. If you can hear me well, just type 1. Yeah, cool. Thanks a lot. Nice, great. Okay, so let's rock it. Today, oh yeah, by the way, my name is Dmitry. I'm the portfolio manager, trader, and basically the one who has, well, not all, but pretty much all the answers regarding the automated trading, smart trading, portfolio management at Bitsgap, as well as answers regarding the Combobot, which is a brand new product for automated futures trading that we enabled a week ago. So we will also cover it today. We'll show you some use cases, how to use it, how to configure it. Specifically today, I wanted to focus on the automated trading for the spot market and for the futures market. Some of you, I guess the vast majority, because I know that quite decent number of people have been watching my webcast before, so you are pretty much aware of the S-bot, classic bot strategies. The Combobot can be new for you, so we will cover today it as well, so no worries. I wanted to show you in what market scenarios to use the S-bot, in what market scenarios to launch the classic bot, and when it makes sense to configure the Combobot. All right, so let's dive into this. Let me switch the panel. So yeah, we have so far 3 bots. 2 classic and S-bot are for the spot market. All right, so basically the classic bot, in brief, like shortly, that's the ultimate solution if you anticipate the price of a coin to rally. So if you expect it to establish new higher highs, like for example here's 0x, if you think the price will move like this, then definitely stick with the classic bot. The S-bot is the one that brings you the most return on a sideways market. So the sideways market is exactly what you see here on the 0x trading to USDT. So whenever you spot the market trading in the horizontal range like this one, well, like we can set another resistance line as well. So this is where you should launch the S-bot because it brings you the most returns compared with the classic bot. All right, and the Combobot, which is the ultimate bot for futures trading. So not only you can trade on the rising market with a leverage that substantially increases your market exposure and as a result multiplies your returns, but you can also trade if you feel like the market is falling and it will continue the downfall, then you can launch the combo short strategy. And let me actually show you Binance futures. So here it is, you see the short strategy for the downfall and the long strategy if you think like the price is gonna move higher. All right, but no worries, we will cover it step by step. I'm just giving you an overview of what we have so far. All right, and for those who are newcomers, maybe you've never traded bots before at Bitsgap, just to quickly remind you what is the logic behind our bots. Here's the explanation. So the logic is pretty simple, straightforward, and yet very effective. So we have the trading range, which is defined by the highest sell price and the lowest buy price. And within this trading range, we have grid levels. Basically, these grid levels are that are in red. These are limit sell orders, and in green we have limit buy orders. But all combined, these are grid levels. So whenever the price triggers the sell order, like you see here in this example, it triggered the, let me actually use the for some reason I don't have the laser here, but okay, anyway, so imagine the price is now exactly here at the price of 11,500. So the bot will execute the sell limit order, so it basically sells the base currency to lock in the return in the quote currency, and it takes a big chunk of it to plot a new, in this case that's going to be a buy limit order. And the difference in this case is the profit which goes directly to your pocket. So it's something that goes to your balance. That's something that you can use in smart trading, or you can withdraw this money. You can, well, it depends on how you want to use this money. But anyway, this is what the bot has made for you so far. This difference is exactly 250, which is the net profit which goes directly to your pocket, which you can use in this case. So this creates a normal and like an almost never lasting trading session as far as the price stays within the trading range. So whenever the price goes higher, it sells. Whenever the price goes lower, it buys. Okay, and whenever on the market you see these short swings, like if you open, for example, 5-minute chart, you see these are 5-minute candles, and so far you see that's the price action for today. And on this price action, the bot would sell higher, then it would buy lower, so that later it can sell at a higher price. So that's the idea. It's pretty simple, and there are tricks related to this, like how to stay in the market if the price goes above the trading range. And we have the tool known as the trading up, so that's something that we will cover today as well. But let's go step by step. The idea is that there are different market phases, and for each market phase there is an ultimate solution. That's something that I already mentioned. So we know that we have accumulation phase. This is something that which is something that you see before the rally, before the advancing mode. Then after that you see the distribution. That's basically the phase. Then those who made decent amount of money on this rally, they now lock in return, so they are basically selling, and this puts a pressure on the market, a downfall pressure, which eventually can result in a further decline if the market sentiment changes in that case. So for each scenario there is a specific bot, and thanks to the Combobot now you can also generate returns on a downfall, which is something that was not possible before, having only as bot and classic bot. All right, so that's the ultimate solution so far, right? And yeah, now let's go through the configuration, and I will show you exactly how to configure the classic bot, the as bot, and the Combobot depending on the current market scenario. So we go back to the platform, we open the bot section here, and you see now, well, let's go to the spot market. We will start with the as bot and the classic bot, and let's switch to the demo mode. So the cool thing about Bitsgap is that we have this demo mode, which is basically a risk-free trading mode where you can experiment as long as you want. You have this free money, like these are virtual money for you, so you can trade. You can simulate trading on KuCoin, for example, on Kraken, on Huobi. So there are plenty amount of exchanges that we support and that you can connect. So you can test strategies before risking your real money. So that's why I want to show you examples in the demo mode, so you would figure out how to use it for your own development. So you see I already have this active trade, and it's been for like 28 days so far, on average bringing me 0.5% daily. So that's to my initial investment of $12,000. That's a pretty decent return per day, to be honest. So you see, so far it's made like 14% within the period of just 28 days. That's exactly $1,798, which is very, very cool. So yeah, as I said, SBOT is the ultimate solution on the sideways market. Why? Well, the thing is in the investment distribution logic. So what makes SBOT different from the classic bot is that they distribute your investments in a different way. So in case of the SBOT, the idea is that per each grid level, it spends the same investment value. So whenever you see the price falling, it will execute these buy orders, and at which grid level it will spend the same amount of money. So as the price of the coin becomes cheaper, let's say per each grid level it spends $100, just for the sake of the example. So as the price falls, it means that we can now afford buying more coins as they are now cheaper. So for example, here we could afford 10 coins, because 10 coins, let's say at this price level, were worth exactly $100. It falls, now you can afford buying, let's say, 14 coins, because you can afford it, having only $100. So that's the thing about the SBOT, that on the downfall, it basically adjusts your entry price and substantially increases your market exposure. So you end up having your entry price, if you look at this scenario, for example, you end up having your entry price, let's actually use another one, let's use INT trading to USDT, for example. The SBOT, let's use only maybe 40 grid levels or something. So if we launch the bot right now, and if the price falls, then you will see, like, let's say it falls down to this level, like it triggers all the buy orders. So we'll see that your entry price, like your average entry price, is going to be somewhere around this area. So this is your basically entry price adjusted, because as the price was falling, you proportionately increased the market exposure, and that's why your entry price also adjusted, and that's why it's somewhere around this area. Okay, so in case of the SBOT, this works the best way. The dollar cost averaging effect in the SBOT is like works in the ultimate format, whereas in case of the classic bot, the thing is that it always buys and sells the same amount of coins. So for example, it buys only 10 coins regardless of the price. So you will see that compared with the SBOT, on the downfall, it will always buy, let's say, only 10 coins. 10 coins, 10 coins. So each of this grid level, let's assume that it's exactly 10 coins. So you will see that 10 coins here was worth, let's say, $100. If now the price is cheaper, 10 coins now cost, let's say, $80. So it will spend exactly $80. But you remember that in case of the SBOT, it always spends the same value. So it always spends $100. So that means that compared with the classic bot, SBOT at this level would buy maybe around 12 coins, because it can afford it, as it has $100. So that's why on the sideways market, you can achieve the best entry price with the SBOT if the price downfalls. all right, which is good because on the sideways market it tends to bounce off the support line. So that means that you will quickly generate returns from this bounce off. Okay, so that's why the ultimate solution on the sideways market is the SBot. Whereas on the rising market, why classic bot is better? Well, because as you now know that it always buys the same amount of coins regardless of the price. The thing is that, let's say again, 10 coins here, 10 coins here, but now you see the price is $14, like, so it's basically the price appreciates, and now you need to spend more money to afford buying these 10 coins. So for example, $130 is what you need in order to buy these 10 coins. So as the price goes higher, that means that your overall investment exposure increases just because of this investment distribution logic that we have in the classic bot. Okay, because at some point you will see, for example, let's just draw a sample trade. Let's use all these levels. Bam, bam. So let's use as many as we can, just to show you the example. So initially you saw the trading range that looks like this. You have sell orders, you have buy orders, but what happens if it goes like this and it executes all of these sell limit orders? It will place new buy orders at these price levels. So you will see something like this. So you will see only green lines at the end, but that's only in case if the price goes to that point. Okay, so this is where you will see that now you only have limit buy orders. So that's why at some point you will see that the classic bot, if it falls from that point below, then it will have to buy this, it will have to execute these buy limit orders. And as we know, now the price has become bigger, and that means that now we need to spend more investment. So that's why if this pattern continues like this, then you end up having the maximized return possible. So this is something that only the classic bot can achieve. So that's not the case for the SBot, because SBot once again is perfect for the sideways market, whereas classic bot, as it increases the market exposure, as the price appreciates, it brings you more returns on the rally. So that's basically it. So once again, the classic bot is for the rising market and the SBot is for the sideways market. So about the configuration. So here you select the exchange where you want to trade, where you have your fund. So for example, KuCoin, maybe you are trading on the KuCoin. That's literally all valid, credible exchanges. Those that are credible, they are here. So you can find the Coinbase, for example, Kraken, okex. So these are pretty much transparent and credible exchanges where you can trade. So you can launch bots on any of this exchange. It's just that each exchange has its unique rules. So for example, the minimum trade size can be $10 on Binance, for example. In case of the KuCoin, I don't really remember, but it can be that the minimum trade size per each grid can be, let's say, $5. I don't know if it's really $5, it's just a random number, but it can be that on various exchanges the minimum trade size is different, so that's something to be considered. So for example, we decided to trade on KuCoin. We want to launch the bot on 1 inch to USDT. Let's see if we have funds. We actually have Bitcoin only, so let's then trade 1 inch to Bitcoin if we have. No, we don't have it. Then let's choose something that we can trade to Bitcoin, for example, AGI to Bitcoin. So that's it. We look at the chart. Let's say I anticipate that the market will go higher. You see, it's pretty much going higher. It bounces off the angled up support line, so this is a pretty confident market bullish sentiment. So that's just assume that it will continue the rally. So this is the configuration, for example, that you can use. I tend to plot my upper price at the resistance, at the closest resistance, and I tend to plot my lower price where I have my support, so that's somewhere around this area. Okay, so that's one possible configuration that you can have. Notice that even at first glance, like visually, you can spot that the ratio is in favor of sell orders, so it's somewhat around 60% and 40% just buy orders, and that's something that you see already here. So let's assume that I want to spend 0.2 bitcoins. Yeah, so that's exactly $10,000, and the exact investment allocation is following. So in order to start this board so that it places all of these sell limit orders, we need to possess the base currency, right? Which is, in this case, that's the AGI. So that's why we are required to have this amount of AGIs, so that all of these sell limit orders are successfully placed by the bot. And the remainings are for the limit buy orders. So that's the exact ratio of around 60 to 40%. So as you start the board, you are already in the market by 60% out of your total investment, okay? So we clearly stated here, you can see this exact distribution. So depending on your configuration, your initial market exposure ranges. So in this case, your instant market exposure is going to be 60%. So you are already in the market by 60%. The rest 40 are below, just in case if the price falls, so that you end up adding more exposure. And in this case, your entry price adjusts, so that we entered here. Now if the price falls, your entry price will be somewhere around this area, so that when the price hopefully bounces off the support line, you will quickly offset this negative shortfall impact that we had, and you will generate substantial returns as the price goes higher. So yeah, now the thing we need to do is to define the amount of grid levels and the grid step in this case. So that's something I have here outlined in the guide. So we selected the cryptocurrency that we wanted to trade. We defined the trading range based on the support and resistance. That's one possible option for you to stick with when you define your trading range. Maybe you are trading using other technical analysis tools that define your lower price and higher price. So it's clearly up to you guys how you define your trading range. The next step, as I mentioned, is to define the amount of grid levels, because the trading will be different depending on the amount of grid levels. So below 60 grid levels is basically a low frequency trading, because the distance between your grid orders is relatively large. So that means that the market needs to swing crazy enough to capture all of your, like to seize all of your grid levels. For example, just let me show you 4 grid levels. You see? So in order to trigger all of these grid levels, it really must move like crazy. So the volatility must be insane so that it captures all of this, because the distance between your grid levels is like 13%. That's insane. All right. So you risk being out of the market. All right. So that's why, depending on the volatility of the coin that you selected, you need to figure out the ultimate amount of grid levels you should stick with. So in my case, like from my practical experience, as a rule of thumb, I stick with the grid step of 1%. So that's somewhere around 14 grid levels in this case. So I see 1% per grid step is exactly what you make per trade. So like the marginal profit is in this case around 1%. And by the way, the fee that you have to pay per each trade, per each execution, is already priced in this grid. So even though the grid step is a bit like larger, it's around 1.10% maybe, but since we have to pay the fee, like we have to include it, then that's why this is what you see. This, the value is net of all fees, because you see in my active trade I have closed orders, and you see for each order I pay the fee. All right, so that means that the bot profit, that this value that you see right now, is net of all fees. So that's your pure profit. All right, so this is your profit as it is. You don't have to go to your exchange account to see how much you paid per each transaction, so that you deduct and you finally realize what is the return you made. That's something that many other platforms that are trying to utilize the DCA and grid trading, they forget about. They forget to calculate the fee or make it optional, which is in my case something immature, because as traders, as portfolio managers, we don't really need that much time to spend on manual calculations. So that's why we need to see the exact profit we just made, and here it is, net of all fees. That's something that we make at Bitsgap. So that the data that you receive is fully transparent, and you can use it, you can export to CSV to analyze it further, to maybe calculate the Sharpe ratio, sorting ratio, and other metrics that you might use in portfolio management. So it's clearly up to you. So yeah, I stick with the grid step range from around 0.8% up to 1.3%. All right, so that's the optimal setup for me that has proven to be successful in my case. And this kind of range from 0.8% up to 1.2% brings me around 20 to 30% monthly. All right, so here in this sample trade, my grid step is only 0.33%. That was my sample trade. I did not stick with my strict rules here. So you see this grid step, as a result, I only have 14% generated by the end of this month, 28 days so far. If I assume that if I would have my grid space of around 1%, then it would make me around 29% or something, maybe 35%. Okay, it's just that thanks to the demo mode, you have this possibility to experiment. So you can launch bots with a grid step of 1%. You can launch bots, let's say, with the grid step of only 0.5%, or with the grid step of maybe 5%. And ultimately, you will find your golden strategy that brings you decent returns on a monthly basis. Because in my opinions, you can only make conclusions by the end of the month. So let the bot to work for at least 1 month to see the final outcome. Okay, and for me, I already know that my grid step range from 0.8% up to around 1.2% brings me around 30% monthly. Okay, so that's the thing. And those who watched previous webcasts, you remember that I had some trades active and I demonstrated this exact 30% returns. I had like BNB to USDT trading, and also I think I had 1inch trading to USDT. Yeah, it's just that right now I don't have them because I closed them, but yeah, that's something that you can find on other webcasts as well. So anyway, this is the configuration you can stick with, and we have these additional tools to maximize your return, to secure your profits, and to minimize the loss in case if the market moves in the opposite direction. So let's remove the drawings. So the trading up. The trading up for me is the best feature that maximizes your returns. The thing about the trading up is that, okay, you remember that the bot trades only within the trading range. So as far as the price stays within these boundaries, it's gonna execute trades. Otherwise, if it goes lower, this is the area of no trade. And here, if it goes higher, this is the area of no trade. But there is a trick. If you have enabled trailing up, then in this case, as far as the price, like as soon as the price breaches the upper price and goes even higher, you will see that the bot will follow the rally by moving your trading range higher, so that you end up having your trading range somewhere around this new zone. Let me show you some examples that I have. Yeah, so this one, perfect one. Let me show you. So this was my, where you have now yellow lines, this was my initial trading range. As the price breached the upper price of my trading range, it still continued to trade thanks to the trading up feature. I had it enabled. So that's why my trading range has been following the rally. And now you see the trading range is up here, exactly where you see the price, like new price action happening on the market. So all these circles you see depicted on the chart, these are all buy and sell orders executed by the bot. So that's why, thanks to the trading up, I did not skip this opportunity to generate extra returns on this rally. So that's the ultimate solution if you don't want to spend lots of time in front of the computer to close the bot each time it breaks the upper price, so that you now can launch a new one with new settings so that the trading range is now higher, for example. No need to do that, especially if you don't want to spend so much time. You just need to enable the trading up. So if you are away, if you are sleeping, if you are playing with your kids on the backyard, wherever, thanks to the trading up, in case if the price at like during this time, if it goes higher and you are away from your laptop, it will continue to trade by following the price rally. So this applies to the classic bot and this applies to the S bot. Okay, so the ultimate configuration, if you think the price will move like this, like it's going to establish new higher highs, then stick with the classic bot and make sure to enable the trading up. Okay, in case of the S bot, if you feel like the price is gonna move for some time in the sideways market, so if you think like it's gonna move like this, but ultimately you hope that at some point of time it will breach the resistance and will go higher, to make sure that you will you stay in the market and the bot will continue trading even on this new formation as the price forms new higher high, enable the trading up so that it will follow the rally. Okay, so that's the ultimate configuration for the S bot. Okay, so let's remove all the drawings and let me just execute the trade finally. So that was the configuration, 38 grid levels, trading up, start. You see, since I don't have this amount of AGIs on my balance, I need to buy it. So in order to make it quick, you just follow this recommendation by instantly buying with the market buy order, because let's assume I don't have time to buy this on my own. Just stick with the recommendation, just click yes and it will buy it for you automatically. So far so good. You see, we are now in the market, coin exchange, AGI trading to Bitcoin. So here we are. But what about the take profit and the stop loss? I did not switch them on at the time we configured the bot. No worries, you can do this later. So you click here, you can set the stop loss, and you can set the take profit. So the take profit is set in percentage. So as far as your change reaches, like as soon as it reaches a certain threshold, let's say 20%, you set in take profit. And you see that in our case, it's pretty much soon will reach 20%, and it will, if I would have my take profit at 20%, let's set it 20%. You see, let's go our USDT. So in this case, as it reaches 20% of the investment change, it will automatically close the bot by selling all of the base currency remaining in trades. So that's the thing about the take profit. The stop loss, in my opinion, is a must. Like, it's really the most fundamental, essential, that's the cornerstone of the risk management. And that's why do not forget about the stop loss, because this instrument minimizes the potential loss, because you cannot be always correct by 100%. You can have a series of, let's say, 10 successful trades all in money, but at some point of time you will have negative trades. So that's why, in order to minimize the loss, make sure to stick with the stop loss. Make sure that your stop loss is on, and if the price falls to that price level where you have your stop loss, it will automatically sell all of the base currency, so that you are no longer in the market. Your exposure will go from 100% to 0%, so that if the price falls even further down, then you won't incur even larger loss. So that's the thing about the stop loss. Once again, I highly recommend, I literally urge you to use the stop loss, because this really minimizes the loss in case if the market moves in the opposite direction. I mean, even if your technical analysis and fundamental analysis are sound, at some point you will see that, for example, Elon Musk posts something about Bitcoin and says something bad about it. And we've seen many times that this kind of influence impacted the market significantly. That's something that you cannot predict. I mean, you are not Nostradamus or whatever. The thing is that you always need to make sure that your risk is under control, just in case something happens, so that you won't lose your entire balance. So that's the thing. Stop loss is possible in the classic bot, in the S bot, and in the Combobot. So now let's go to the Combobot. Oh yeah, by the way, I see the question about the change. So you have here two columns, and let me actually zoom in a bit. So you have the change and the bot profit. The change is the value that takes into account the profit generated by the bot, and you know that the bot profit is always in green. So this column is always in green because it's the profit that the bot generates as it buys low and then sells higher. All right, so that's why it can generate this return regardless of the market trend. So even you see here, that was a short-term downfall, it generated returns, because if we zoom in, you will see that there was a plentiful number of opportunities where the bot could buy low, sell high, buy low, sell high. You see, micro trade opportunities, regardless of the trend direction, it just keeps making money for you. So the cool thing about it is that this profit generated on this shortfall, it will offset the total negative value change of the base currency. So in this case, we now come closer to the change. So the change column, it takes into account the bot profit, so the profit generated on each of these market swing, and also takes into account how the value of the base currency has either appreciated or depreciated. Okay, So for example, let me show you something. And I hope I have it here. Yeah, so here's one. That's my ultimate example that I always show. Imagine you just purchased Quantum, where you see hodl pointing at. So you just bought Quantum expecting the price to go higher, but unfortunately it falls. So in a simple scenario where you just buy it, you end up having a loss of around minus 6.88%. But in an alternative scenario where otherwise you would launch the Bitsgap bot, like you see here below, on this downfall, the bot would generate some returns, and here exactly that's $23. That this return will offset the overall negative impact. So that's why you end up having a loss of only minus 3%. And now compare this minus 3% with minus almost 7%. Which one is, like, which performance has proven to be the best? And I think that the answer is pretty obvious. So on the downfall, automation not only continues to bring you returns, but it also minimizes the overall downfall impact. Okay, so that as soon as the market reverts and goes higher, it will quickly generate returns to cover this minus 3% investment change, and you will quickly enter in the profit area in any case. So that's the thing about the change, that it takes the market volatility, like how if the price is falling or rising of the base currency, and the profit generated so far by the bot. Okay, so you can see that your investment change can be relatively bigger than the bot profit, and you can also see where your change can be lower than the bot profit in the scenarios of the downfall. So that's the thing. So now let's go and see what we have in the Combobot. So let's zoom in a bit. Let me check your questions. Yeah, so let's continue. So now, finally, for those of you who haven't been on my previous webcast, I will show you the Combobot. And for those of you who already been trading the Combobot, there is something that I wanted to show you still. So let's switch back to my real account, where I have some real trades open. So let's switch to Binance Futures. That's where I'm trading right now. So these are my open trades so far. That's the Combobot. So that's, you see, long bot. So that's the one trading on the rally. And so you see, I launched Quantum, BNB, and 1inch, anticipating the price to go higher. So far, so good. You see, the overall sum profit is $22. And by the way, that's the key metric to monitor, the sum profit. Why? Because it takes into account the profit that you see in this column, and the profit, like the unrealized return that we now have in our open futures positions. So for example, you see 1inch, and we see $14 in profit and minus $1 in unrealized return. So if you click here, you will see that in reality so far it has managed to make $16. Yeah, so the bot, by buying low and selling higher, it has managed to bring me $16. But since my open P&L right now is -2, that's why we don't see 16, we see 14. So that's because of the difference. So 16 minus 2 is exactly 14. Okay, so what you see here, that's the key metric as well. It takes into account the realized return and currently pending unrealized return. So for example, my Quantum and 1inch, overall, they are in profit. Whereas in case of BNB, we are now in the negative area, minus $1. Even though it still managed to make returns like $6. No, actually not $6. Let's filter by the most recent trade. And here it is. Now 29. And I need to see the recent sell. So here it is. Yeah. So you see, by sorting out the column, you get the idea of what is your overall profit generated by the bot, and taking into account the current unrealized return, which is, you see now it's -7 for my BNB. That's why $6 generated by the bot minus 7 is what I have in my position P&L is exactly -$1. Okay, so it might be confusing for those who just first time see this interface for future bot trading for the Combobot, but it's really straightforward, easy to understand, and pretty much I explained key metrics you need to monitor. So on the left side you have the overall result, and on the right side you have a current P&L from your open positions on the futures market. So I can go to trading to show you this. So for example, where I have my BNB, that's BNB, and let's click open orders, BNB, boom. So you see all these orders on a chart, and it shows you at which price it will sell and at which price and the amount it will buy. Okay, so that's something you can see as you go to the trading dashboard layout. But let's go back to my bot section here. And yeah, so far so good, $20. My initial investment per each trade, you see Quantum initial position value was $22.40 for BNB and 17 for 1inch. So let me show you the key difference. Like, I mean, Combobot is almost like, it's completely different from the S bot and the classic bot, apart from the fact that it also uses the grid technology, but it also combines this grid technology with the DCA logic. So basically Combobot, that's why it's called Combo, because it's a combination of grid levels and DCA levels, like grid orders and DCA orders. So DCA orders are those orders that are used just to adjust the entry price. So for example, in my Quantum, my DCA orders are below the entry price. So here they are, DCA orders. So if the price falls, it will add more exposure. So it will increase my position value. Okay, and so far it's 70. Yeah, and it will increase it by like 2 times more. So that's why DCA, it basically adjusts your entry price and increases your market exposure, whereas grid orders are above. These are basically your take profits. So for each DCA there is a grid to lock in returns. Okay, you buy something and then you sell it. So for each DCA grid there is, for each DCA order there is a grid order. So that's the thing. Now we need to understand the allocation. So for example, I want to allocate $20. Okay, it wants me to put 22 for this configuration. Okay, let's stick with this, $22. Since we are trading with leverage on the futures market, that means that your $22 is actually, well, in my case I have 10x leverage, so that means your position value is around 240. So we simply multiply your margin by 10x, so that's 240. So now is the trick, like the the secret of the bot. So you set, let's actually set $30 to make it simple. So as a rule that we implemented in Combobot, as you start the bot, as you launch it, instantly it enters the market with 50% of the USDT. So that's 50% of your initial margin. Another 15 USDT margin is used to plot all of these short sell orders, because in futures market we have short sell orders. So for each long order we have short sell order to close it, because it's not, I mean, I don't want to make it complicated, but for those of you who know, there is a reduce only trades and just simple open orders. So in the Combobot we have open orders. So that means in order to sell long position, we short sell it by the same value. Okay, so that's basically debit and credit, which results that you just exit the market. But in another scenario you would stick with the reduce only function, so that I mean, I'm really trying to make it really complicated, but okay, forget it. So the thing is 50% out of 30, it's your initial buy. Another 50 we use to plot all of these sell orders. Another 50 USD can be used to execute all of these DCA orders. And we enabled a second layer of DCA orders, which is below this one. So you see, you end up having 4 times 15 USDT. So that's why, in general, your overall market exposure can be 60 at the end. So 15 plus 15 plus 15 plus 15, 4 times, that's exactly $60. So let me show you some sample trades that I had. So you see here, for my reef, that's the one I traded, and I put $41, and it's been falling heavily, and it increased my market exposure by 2 times. That's exactly as I said in the example with 30, where our exposure is otherwise can be 60 in the worst scenario. And here that's something that exactly happened. And you see, I started with 41 USD, that was my initial margin, but I lost $84 here. That's the thing about the Combobot, that in order to enable in order to provide enough space for the bot to trade, and taking into account the crazy volatility of the cryptocurrency market, we made it that way that your initial margin can be doubled at some point as the price goes in the opposite direction. And that's why I show you these examples, and I urge you to make sure that you understand the nature of futures market, you understand what leverage is all about before trading the Combobot, because here the risk is larger compared with the as bot and the classic bot, our traditional bots for the spot market. In futures market, it's a completely different story, completely different risk management system. So I just need to make sure that you understand it, and that in general your initial margin can double, so it can be 60 at some point. Okay, so that's why you see we have this allocation only up to 50%. Initially it was 20%, but now we have it at to 50%, because we want to minimize the risk exposure at the time when you launch the bot. Okay, so for example, in this case, my 30 USDT can be increased up to 60. Okay, so anyway, that's the logic, and this is how it is. So once again, 50%, that's initial open position, another 50 goes to these sell orders, another 15 goes to DCAs here, and another 15 go to the second layer DCA in case if the price breaks the lower price and goes even lower. So we enabled this, even though it's not visible, it's here hidden. Another $15 will be used to initiate new DCA orders. Okay, that's the mechanism as it is right now. For some of you it might be a bit confusing and you wondering why we have this second invisible DCA layer, but the thing is that that's the current solution. After testing various configurations, launching so many bots in the test mode, we realized that this is so far the ultimate solution to achieve the best dollar cost averaging effect in case if the market goes in the opposite direction. And in this scenario, the bot will cost average your entry. I mean, it will adjust your entry price by increasing the exposure, so that at the end, as the price reverts, you will quickly offset this negative impact. So that's why we have 2-layer DCA structure so far. Yeah, you have 2 modes, the cross and isolated, but that's something that you can figure out on your own. In brief, cross margin it takes your entire balance. By taking your entire balance as a margin, you basically provide more space for the bot to trade because it has now more margin to trade. So that means that your liquidation price is gonna be farther compared to your entry price. Whereas in the isolated mode, you risk losing only a portion of your margin. But in the isolated mode, your since you can launch more than one bot, and let's say you launched some bots with the cross margin mode, some with the isolated mode, you know that in the cross mode, those bots launched in the cross mode, they share the whole margin balance. Those launched in the isolated margin mode, they have a certain staked margin amount. But at some point you will see that in the worst case scenario, when all of your bots are in the loss area, at some point the bot won't have enough margin to execute DCA orders. So that's why make sure that you allocate an adequate amount of margin per each trade. So for example, in my case, my balance is 387 and available is 268. Since I know that my initial margin can rise up to 60, then at least 60 is what I keep in mind that I can lose in this trade. So I can afford losing, well, it's pretty decent value since 60 is a big chunk out of my available balance, but still, yeah, now I know that I can lose 60. If I put 30, then I know that I can lose 60. If I put, let's say, 60, I now know that I can lose up to 120. So make sure that you look at your available balance. This is your available margin, and take into account that you can lose double of your initial margin. So that's the thing, and that's why you see these sample trades where I have initial margin of around only 17, 40 and 22. So I know in worst case scenario in quantum I can lose 44. In worst case scenario for BNB I can lose around 80, and for 1 inch I can lose around 34. But since I have stop loss, which is, you see, it's even higher than the last DCA that I have here, that means that my risk exposure here is, I mean, the maximum loss I can incur, it's not 80, but maybe around 65 or something like that, because my stop loss is higher. So that's the thing about the Combobot. I mean, I know that it really is more complicated than the original SBot, and the classic bot. But in general, futures market is sophisticated, and that's really for those who have some experience in the spot market trading. So that's why this Combobot is for those who at least understand the basics of the futures market and have some experience trading on the spot market. These are the prerequisites for you guys to start trading the Combobot. Since we don't have yet demo mode for futures bot, experiment by trading the S bot and classic bot, so that you understand at least the nature of automated trading at Bitsgap, so that later you can start experimenting with the futures bot. So once again, it's a highly risky bot, but at the same time it can bring you a fortune, because you are trading here with the leverage, and trading with the leverage, you know that you can trade with like abnormal position value, something that otherwise you wouldn't be able to afford on the spot market. So for example, let's say you have only $100 on your balance, and with leverage you can trade with position worth $1,000 just by having $100. Okay, so that's the thing about the futures market. It's highly volatile, it's highly risky, but if you are right and if your risk management is sound, then at least your projected profit relative to the projected loss is more or less justified. So that's why when trading the Combobot, I always make sure that my stop loss is on. All right. And by the way, the stop loss in the Combobot is automatically trailing. So that means that as the price goes higher for the long strategy, my stop loss will move higher as well. So at some point you will see that, let's say we traded like this and now we are trading over here. Okay, so assume that we are now here, BNB at $760. So you will see that your stop loss will be around this area. So that at some point your stop loss will become your take profit. Okay, because the profit generated on this rally will be secured by the stop loss that previously acted as a loss minimization tool. But now, since we had a series of successful trades, now the stop loss is over here, and now this stop loss is pretty much acts like a take profit. Okay, so that's the cool thing about the trading stop loss, is that it has double duties depending on the market scenario we are at. So yeah, initially it minimizes the potential loss, but at some point after the series of successful trades, it will become your take profit. So always make sure to stick with the stop loss, and by 10 times I urge you to use the stop loss in the Combobot, because here your risk is already in general is so much bigger compared with the spot market, that I mean it's 10 times I urge you to use the stop loss in the futures trading. Okay, so that you won't see this kind of fails that I have had in my sample trades. There I like located 41, but I lost in general $84. Okay, so that was basically a free fall market, and that's why I mean I did have the stop loss here, you see, but it was relatively distant from my entry price. Yeah, so make sure that you trade futures contracts where your entry price is justified and where your stop loss is not that far from the entry price. Okay, so that's the thing. In case of the short trading, it works the same way as the long, but it just that it generates returns only on the downfall. That's why it's called short, because it short sells the market. So in this case, in the short bot, your DCA orders are here above, because for short bot, adding more exposure is by executing more short sell orders. So that's why your DCA configuration is above the entry price, and for the short bot below you have grid levels. So these are your take profit, because we know that for the short bot your take profit zone is below the entry price. Okay, that's the only difference with the long. So as far as you think that the price will fall, then stick with the short strategy. If you think the price will go higher, stick with the long strategy. If you think the price will move sideways, well, do not use the Combobot, because it's only designed for the market scenario like this and like this. It's not optimal for the sideways market, because you end up having a zero delta. So basically your return is around 0 in this case. So that's why if you feel like, for example, you wanted to trade on RIF to USDT with a Combobot, but you look at the chart and you feel like it's gonna move sideways. So that's why you will switch back to your spot exchange, and on the spot exchange on RIF you will launch the SBot, because you know that the SBot is the ultimate solution for the sideways market. Okay, so here's the overview. Yeah, sideways, SBot, rising market, classic or the combo long, and the downfall, that's the combo short. Okay, so far 3 bots explained, and maybe next time we will have a webcast just dedicated to the Combobot, where I will show you more use cases and more tips and clues. The agenda of today was to show you all 3 bots and all market scenarios when you should stick with the classic bot or the SBot or the Combobot. Okay, so we have this clearly outlined on the chart you see right now, and yeah, I highly urge you to use the stop loss for the SBot, for the classic bot, and especially for the Combobot. Okay, in order to secure your returns, make sure to use the take profit to maximize your returns, and to make sure you are always in the market in case if the price goes higher, use the trailing up. Yeah, by the way, in the Combobot the trailing is automatic, so it means that it will follow the trend automatically. So yeah, actually initially we wanted to name this bot the trend bot, but decided to call it the Combobot. But the idea at start was that it will follow the trend. So if you launch the short bot, then it will follow the downfall trend, and if you set the long bot, it will follow the market rally endlessly. So that's the thing. So yeah, no rush, take your time, experiment in the demo mode. Thanks to this risk-free simulator that we have at Bitsgap, you can experiment as long as you want until you find your golden formula of success. And thanks to the history, you can analyze all your past trades. Let me switch back to my futures trade. You can analyze all your past trades to see where you generated the biggest return, and then you analyze why you made such an immense result, and you also analyze your worst trades where you lost lots of money, so that next time you won't get the same bad results. It can be that at some point you forgot to set the stop loss, and you will see that in the futures history that at some, like, you will see the status like it was forced closed because of the liquidation price, for example. And then you will realize that, okay, next time I will not forget about the stop loss. And yeah, to maximize your returns, you will spot that those trades that you made fortunes, you used the take profit, for example, which secured your returns. It really depends case by case, coin by coin. And anyway, just use this data flow to analyze your weaknesses and to analyze your strength, so that next time you won't make these mistakes anymore, so that next time you maximize your returns, and so that next time you won't incur large losses. Okay, so we have this data here available, analyze it. And yeah, well, so far for some reason I don't have closed positions for the ATC, but yeah, I think it's right now under development. It's just maintenance right now, but actually you have to see it's actually visible here, all the performance of the bot, like daily profit generated and other metrics as well. So it's pretty crystal clear here. Yeah, find your ultimate solution, find whether you need to stick with the 1% of the grid step, or maybe in your case you are better at 2%. That's clearly depends on the list of coins you are trading. Yeah, because if the coin of your choice is highly volatile, then you can generate decent returns with a grid step of 2%. If the volatility is pretty much moderate and you need to capture, like you need to save this moderate volatility, then 1% is more than enough, because at 1% grid step your grid levels are tightly enough located to like each other, so that the short-term markets swings is something that the bot will seize, thanks to this relatively tight configuration. Okay, so yeah, you have this sandbox to experiment, to figure out your ultimate strategy. And if you are in search for some tips and clues and some ready-made strategies, just go to Bitsgap, and there you will find some ready-made strategies. For example, if you go here, where did I left it? Yeah, so here it is. For example, that's part 2. So these are some ready-made solutions based on the pattern formations that you can trade. You see the exact configuration, the exact grid setup, and all details like where you should set your stop loss, whether or not you should stick with the trading up, where you should plot your take profit, and all that stuff. So it's here. Make sure that you read the blog, because each week we publish useful information that can benefit you a lot, that can bring you more insights, that can teach you a lot. So yeah, things like 5 things to remember when trading, and how to make 30% monthly. So there are use cases. There is also one story about the guy who made in 4 months from 1,000 he made 50k. So here's this story also. So I mean, everything for you, my friends, and we always make sure that you get as much insights from us as possible, as many use cases as possible, as many tips and clues, so all that stuff. So I hope so far you enjoyed this webcast, and I really urge you to stick with the risk management when trading spot and futures market. Experiment in the demo mode before risking your real money. Okay, subscribe to the channel so that next time you won't skip the next video, the next webcast. Follow on Telegram. If you have some questions left, you can ask your questions in the Telegram. or anywhere else where we are present in the social media. And of course here you can ask the support, like you can create a support ticket and ask any question you want. Of course, you most likely, I'm not sure if we will post this webcast, but at least you can watch previous webcasts where you have the comment section, and you in the comment section you can leave your questions, and I can assure you that each question will be answered. So as far as the question is relevant, it will be answered. So I value your feedback, and I need your feedback to improve the quality of future webcasts. I need your questions to see what should I focus on next time, okay? And I've been looking at the chat throughout the whole duration of today's webcast, and I saw some of your questions. Some I covered, some covered by Paul. Thanks to Paul. Yeah. I see the question, why don't we have a trading stop loss on the classic bot? Well, because that's the current solution, that we don't have the trading stop loss in the classic and the S bot, but maybe in the future we will add this feature. So far, this is how it is. This is the ultimate configuration you can have on the spot market. That's only the trading up and a static stop loss. That's what you get so far. That's the current solution from the IT department. Okay, so yeah, so far how much time? Yeah, almost 1.5 hours left. So anyway, thanks a lot for coming. Thanks for your time. I never take your time for granted, because I know that otherwise you could spend it on other things, other maybe useful things. But that's why I always focus to bring you the most clarity, like as much useful information as possible and as many use cases as possible. So I hope you enjoyed. Smash the like button if you like this webcast, and I hope to see you next Thursday. So stay strong, stay safe. I wish you profitable trading. Once again, don't forget about the risk management, and I see you next time.